AMC is yet again hitting a new multi-year low today, almost a $4 stock. Yeah, we're at $5.15 per share, another day closer to Adam Aron destroying AMC theaters, AMC Entertainment. Here in this video, we're going to go over everything that's happening today. We did get some data that came out that is affecting the markets. At first, it was positive. Now it's negative. Kind of a confusing situation overall. We'll talk about it and try to put some of that into context. We will also go over any and all developments for AMC stock here on the day today. Let's get into it. Hit that like button and subscribe to the channel if you guys have not done so already. AMC stock down about 3% today to $5.15 per share. You did hit that multi-year low today at $5.08 per share. You're a bad day away from being a $4 stock. Now, hopefully Adam Aron wakes up and, sees the sunshine and hears the music on the walls that says, hey, or the writing on the wall, and says, hey, we can't dilute shareholders anymore. We need to get AMC stock price up. Adam Aron is probably the only one that can do that at this point. If the markets go through a ferocious, rally, that could obviously help as well. But every day Adam Aron waits, he puts the odds of getting AMC's share price back into the teens or the 20s, makes those odds go down a little bit the lower AMC share price goes right now. So I think that's important because that could set us up for some pretty large gains from here if and when that does happen. If I was Adam Aron, I would have already done this, probably the first of the year, and AMC stock would probably be a $9-10+ stock right now. But that's neither here or there. That's obviously, not happened so far, but we'll see. And all it's going to take is a commitment from Adam Aron to not dilute shareholders. We'll see if that happens, though. Let's take a look at option activity today, turning way more bearish than what we are used to seeing. Although it's still bullish, it's not nearly to the same extent as it was before. You do have volume of 52.89%, volume to the put side of 47.11%. The interesting flow sentiment today from hedge funds and institutions is capturing two orders totaling $221,000 with a positive order value of 30%. So really nothing to write home about, but the actual percentage of volume that is calls or puts, definitely a lot lower today than what we're typically used to seeing. Now, if you take a look at the Ortex data here, you do have 8.05% short interest of free float and $106.96 million worth of short positions in AMC. Days to cover 0.98, 20.18 million shares that are currently sold short. Shares out on loan 16.01 million, cost to borrow 1.08%, utilization of 29.99%, and a short score of 52.48 out of 100. So again, nothing too crazy here. I personally think AMC stock is multi-100% sold short, could be 200-300% sold short in my personal opinion. That's not going to matter, though, if Adam Aron continuously dilutes shareholders. The shorts are not going to wake up one day and say, hey, this dilution is good news for AMC. That's not going to happen. As you can see from this article today that was released from Quartz, they say one-time meme stock AMC is hitting rock bottom. And if you take a look at kind of, what's going on, recently AMC raised about $22.5 million. They actually just converted shares to pay off some of their debt. But $22.5 million is a drop in the literal bucket compared to the $9.3 billion of total debt outstanding. And Adam Aron and AMC had to issue 3.3 million shares. And that has effectively taken the stock from, the $6, $7, almost $8 level down to $5 per share. It's a fact at this point. Adam Aron, AMC, they cannot continue to dilute shareholders. And I don't think they will at this point, just simply because one more dilution, whether it's 3 million shares or 1 million shares or 2 shares, it really doesn't matter. Point is the same. AMC stock will continue to fall. And next thing you know, it'll be a $3 stock. Good luck getting the stock from $3 to $20. Where AMC would need the stock to be to pay off even a good, little chunk of their debt. So it's getting down to the wire here. And I hate to, say that, but if Adam Aron does not act soon or just stop diluting shareholders. If we get another round of dilution, yeah, it's not looking so great. Okay, that's just the bottom line to it. I wish I had something rosier and more optimistic to say there. Now let's take a look at AMC here on StockTwits, see what the sentiment and message volume gauges are doing for us. Again, AMC stock is down 3% today, and we can see sentiment is extremely bearish at 2 out of 100. So categorized as extremely bearish. Message volume is at 98. So lots of message volume. But there's basically everyone is bearish. And I see a lot of people, say market manipulation, all of that. I don't think there's a lot of that going on right now. I think it's really just Adam Aron's fault. Let's call it for what it is. This is Adam Aron's fault. The reason AMC stock is $5 per share is all in credit to Adam Aron. At this point, obviously market manipulation had its role to play, but now that you're just getting dilution after dilution after dilution, it seems like a pretty easy trade, right? If you're just going to keep getting more dilution, I mean, a lot of big money, a lot of people don't want to continue to buy AMC into massive rounds of dilution, which won't stop. I mean, apparently, you would have thought it would have calmed down by now. We would have maybe not been getting all this dilution. I don't know. Dropping the share price, 30+% to raise 22 million of cash doesn't sound like a good business move. But obviously, we'll have to see what does transpire. Now, if we take a look at the data that came out this morning, the data was actually very good. So the non-farm payrolls came in at 216,000, maybe a little bit hotter than what we wanted to see. Maybe we wanted to see a number around 190,000, 195,000, but 216,000, that is quite a bit. And I heard some of the last payroll numbers also got revised higher as well. So it looks like the economy is definitely running red hot. That means, unfortunately, the Fed does not have to rush to cut rates. But what's actually interesting, if you look over here at the Fed rate monitor tool, you're still pricing in 6 rate cuts for 2024. But now for March, the odds of a rate cut, your first rate cut in March, actually went higher today based on this data, which is very interesting. The previous day probability of a rate cut in March was 60.5%. Today it's 70% even. I mean, that's a little strange. I mean, it really makes you wonder what's going on there. Now, ISM Services PMI. This is data that initially sent the markets, higher when it came out. It came in at 50.6. The estimate was 52.6. So you came in a lot lower than estimates here. That typically does not happen with ISM Services PMI. So it looks like services really starting to slow down here, and that could, help give a boost to the markets as well. Services is really where you have a lot of that inflation still. Well, not as much now as it used to be, but services definitely an area that we want to see kind of cool off. That and housing. Now, housing really not showing any signs of cooling off too much, but yeah, we'll have to wait and see. Factory orders month over month for the month of November came in at 2.6%. Estimate was 2.1%. Factory orders excluding transportation at 0.1%. Estimate was 0.7%. So that was a big miss there. ISM service business activity at 56.6. Estimate was 55.3. ISM services employment came in at 43.3. The estimate was 50.7. ISM services new orders came in at 52.8. Estimate was 55.7. So new orders really missed as well. That's why maybe today you are getting some recessionary fears that are playing out here. Maybe that would explain why stocks are kind of selling off right now. ISM services prices came in at 57.4 out of 58.1, which was the estimate. So Kind of some mixed data here. It looks good for inflation, not the greatest for the economy, but then you have the non-farm payrolls, which look pretty good. You also have the unemployment rate, which came in at 3.7%, which was the same as last month. The estimate was 3.8%. So labor market looks good. Economic signals, though, definitely not looking great. So very interesting what we're seeing, and the reaction in the markets is, quite a negative one. You're coming off the highs of 470 here on the SPY today. Now you're back down to 466. If this does not slow down towards the end of the day today, it could get bloody on Wall Street. Small cap stocks taking it a little bit harder, down about 1/3%. But really, AMC down 3%. Obviously it has to do with the markets as well, but again, it's really concentrated to the point Adam Aron has no idea what he's doing right now. Has to be a streak of one of the worst executive decisions I've ever seen a CEO make. Let's be honest there. I've been in the markets for a long time. I've never seen a CEO be this reckless with their company's stock price. There's no respect for AMC stock, and Adam Aron thinks he's invincible, can do whatever he wants, and investors are just going to sit back and continue to buy the stock. I think they're learning the hard way. That's not the case, and that's actually a good thing, right? That's a great thing, because when Adam Aron finally learns that I'm going to send AMC into bankruptcy, well, that's when they change. That's when their attitude towards the stock and raising capital changes, and that will be a benefit for you, for me, for everyone that owns AMC. That will, be a reason potentially to give us the MOAS. If AMC can actually raise capital at good prices, like, the markets might actually like that. Not at $5 per share. The markets are not stupid, right? The markets understand that, hey, AMC can raise about 300 million shares. If the stock price is at $5 and never goes higher, AMC is going bankrupt. Mathematically speaking, AMC is going bankrupt. Okay? This is not up for debate. Markets are not stupid. They understand that. If AMC can get the share price to, $15, $20 per share and they start raising capital, then AMC's got a good shot of surviving. That's what you really need to know, okay? And let me know what you think Adam Aron is going to do down below in the comment section. Now, here on the day today, per some of the strong data that we got, you could see a 30-year treasuries up about 6.5 basis points today. 10-year treasuries up 5.5 basis points today. So 10-year treasuries continuing to climb here. Not exactly a great thing for stocks. Another reason why stocks might be selling off. There's a lot of talk about earnings season as well. The earnings season might not come in as good as some people were hoping for. And that could be one of those, sell first, ask questions later kind of situations that is playing out right now. Now, if you look at January 5th's expiration, that is today, you do have 1,400 calls currently in the money. Out the money calls 77,000, in the money puts at 27,000, and out the money puts at about 9,000. So no surprise why we're seeing a little bit more of that bearish activity here in AMC stock today. AMC is actually 10x underperforming IWM, almost exactly. A little bit worse than 10x, maybe 11x underperformance today. That's not great. So we'll have to wait and see. AMC stock, I will tell you, is very oversold. The RSI is at 24.57, and the MACD line is, negative, but really doesn't look too bad in the grand scope of things. So let me know what you guys think about this down below in the comment section. Let me know, what you think Adam Aron is going to do next. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.